Hey everyone, welcome back to Corporate Decoder, the place where we decode the cryptic language of corporate finance, and let me tell you, VERU Inc. Its latest filing is quite the story. We are diving deep into their fiscal year 2025 report, and it's got a little bit of everything. Now, VERU Inc., a biopharmaceutical company, has just dropped their annual report, and it makes for a really interesting read, especially when you consider their current stage of development and recent strategic moves. They're in the business of developing new medicines, primarily for heart and metabolism issues, and also for inflammation. They've got two main late-stage drug candidates, enobosarm and sabizabulin. Enobosarm aims to improve weight loss drugs by helping the body lose more fat and keep muscle, which is a big deal for obesity treatment. Sabizabulin is being developed to tackle inflammation linked to clogged arteries. But what is really significant is that they recently sold off their FC2 female condom business in a big strategic shift. This sale closed on the 30th of December 2024, and it is clearly a major turning point for the company, moving them to focus almost entirely on their drug development pipeline. As with any company in this space, there are a ton of risks, and VERU Inc. certainly lists them out. Think about the long and expensive process of getting a drug approved. They readily admit they have limited experience in getting a drug approved, and clinical trials can always hit delays, or worse, get suspended or even discontinued altogether. They also point out that preliminary data from trials can change, and there are big hopes pinned on these drugs, but success is far from guaranteed. This is a stark reminder of where they stand. After selling their FC2 business, they currently have no revenue coming in. The whole game now is on their drug candidates. They are upfront that they may never make a profit, which is a crucial point for any investor to consider. The path forward relies heavily on securing more funding, which is always a challenge for development stage companies. And here is a big red flag that usually gets people's attention. Their own auditors have raised a significant concern about their ability to continue operating. This statement essentially means there is serious doubt about whether the company can keep its doors open for the next year without more money. It is a serious statement that underlines the high stakes and the need for very strong financial backing. Looking at their business, competition is a major factor. For enobosarm, a potential obesity treatment, the market is already crowded with big players, while VERU Inc. believes its drug has a unique approach by preserving muscle mass. They are going to face stiff competition from established pharmaceutical giants if their drug ever makes it to market. Intellectual property is the lifeblood of a drug company. VERU Inc. is heavily reliant on patents for their drug candidates, and they acknowledge the risks. Their patents could be challenged, expire, or simply not be as strong as they hope. This could open the door for competitors and seriously hurt their business. Here is a detail that directly impacts shareholders. Their stock price has been on a roller coaster, and they've had issues meeting the minimum stock price requirement on the Nasdaq Capital Market. They did a reverse stock split recently to try and fix this, but there is no guarantee it will work long term. Delisting would make it much harder for investors to trade their shares and could severely affect their ability to raise capital. Now, let's get to the financials. This is where we see the real picture. Looking at their balance sheet, a key number here is their cash position. As of the 30th of September 2025, they had about $15.8 million in cash equivalents, and restricted cash. This is down from about $24.9 million the previous year for a company investing heavily in drug development and having just sold a business line. This cash burn is something to watch closely. Moving to operations, their net loss from continuing operations in 2025 was around $15.7 million, an improvement from about $35.3 million in 2024. This improvement is largely due to gains from selling assets rather than core business growth. Their research and development expenses did increase, which is expected as they push their drug candidates forward. The cash flow statement really tells the tale of their financial health. In 2025, they used about $30 million in operating activities. This shows that while they're making some gains from asset sales, their day-to-day operations are still burning through a lot of cash. The good news is that investing activities provided a significant boost of over $25 million in 2025, mostly from that sale of the FC2 business and the Entadfi assets. Their discontinued operations, which is mainly the FC2 business they sold, brought in roughly $4.5 million in revenue in 2025, down significantly from over $16.8 million in 2024. This highlights the impact of that strategic sale. The loss on the sale of the FC2 business was about $4.1 million. Their auditor, Cherry Bekaert LLP, has also flagged the significant doubts about their ability to continue as a going concern. This point is repeated and emphasized, showing the seriousness of their financial situation. They had to spend a lot on legal and accounting fees related to restating past financial statements, which is never a good sign. Now, let's look at some of the critical numbers that are tricky to assess. The amounts for accrued and prepaid clinical trial expenses. As of the 30th of September 2025, they had about $50,000 in accrued expenses and just over $90,000 in prepaid expenses related to clinical trials. Auditing these numbers is tough because they rely on estimates from multiple third-party providers, and the actual costs might not be known for a long time, making it hard to get a precise picture. Now, for my take, VERU Inc. is in a high-stakes, high-risk business. The sale of their established product line signals a bold bet on their future drug pipeline. They've got promising science with enobosarm and sabizabulin, especially in addressing unmet needs in obesity and cardiovascular disease. However, the shadow of their going concern warning from the auditors and the reliance on future financing cannot be ignored. Investors are essentially betting on the success of their drug development, which is a long and uncertain road. The risks related to patent protection and regulatory approval are substantial. On the plus side, the sale of their former business has provided some much needed capital, but it is a temporary fix. The company's direction is clear, focus on innovation, but the financial sustainability remains the biggest question mark. That is our breakdown of VERU Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. And hey, if you want to connect with other finance enthusiasts and get more exclusive content, check out the Discord community, link down in the description. Thanks for watching, see you next time.